Today, Bitcoin climbs following an encouraging inflation reading. Nasdaq plans to invest $50 million in a partnership with crypto exchange Gemini. And Sylvia Favretto, general counsel of Mysten Labs, weighs in on regulatory advancements for crypto in the U.S. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are in the green as of midday, and the S&P 500 jumped to a new record after a reading on wholesale prices unexpectedly dropped, a welcome development for investors vying for a Fed rate cut next week to boost the economy. As of noon Eastern, Bitcoin climbed to just under $114,000. Ether rose 2.8% to $4,400, and Solana Sol token increased by nearly 5%. Institutional interest has been shifting towards Solana in recent weeks, and Sol's move higher today comes after the original Solana-focused accumulator, Sol Strategies, uplisted its shares to the Nasdaq, which began trading yesterday. On top of that, this week, Forward Industries announced a more than $1.5 billion private investment led by Galaxy Digital, Jump Crypto, and Multicoin Capital for its Sol treasury strategy. Okay, let's talk about the top stories. Gemini, the crypto exchange founded by the Winklevoss twins, has secured Nasdaq as a strategic investor ahead of its initial public offering this week. Nasdaq plans to invest $50 million in the crypto firm in a partnership that would allow the stock exchange to offer Gemini's custodial services to financial institutions. In a statement, a Nasdaq spokesperson told CNBC that the company continues to expand its capabilities amid an evolving regulatory landscape around crypto. The spokesperson added that the company would work with Gemini on a non-exclusive basis to offer multi-custodial and staking services for digital assets, and that Gemini would also be a distribution partner for the exchange's trade management system, Nasdaq Calypso. Now, this comes as Gemini plans to go public this week. According to this filing with the SEC yesterday, the crypto exchange aims to sell more than 16.5 million shares, priced between $24 and $26 each. This also follows Nasdaq's efforts earlier this week to enter the tokenized securities space. And sticking with new partnerships, global crypto exchange Binance is teaming up with investment giant Franklin Templeton. The companies announced today the two would team up to develop digital asset products. In the news release about the new partnership, Franklin Templeton's head of digital assets pointed to investor interest in the space and said the company's goal is to, quote, take tokenization from concept to practice for clients to achieve efficiencies in settlement, collateral management, and portfolio construction at scale. Now, this comes as we're seeing a wave of partnerships between crypto firms and TradFi, including the one we just mentioned between Gemini and Nasdaq. All right, focusing on developments for crypto regulation in the U.S. for our main story. This afternoon, I spoke with Sylvia Favretto, general counsel of Mysten Labs, the developer behind the Sui blockchain, about what's next for crypto on Capitol Hill. She met with the SEC's crypto task force yesterday and has been closely monitoring regulatory advancements for crypto in Washington, D.C. You're speaking with us from Washington, D.C. today, one day after meeting with members of the SEC's crypto task force to discuss digital assets and share your view on market structure, a hot topic after the House passed the Clarity Act in July, which focuses on market structure. Now, we're hearing a lot about industry executives meeting with SEC officials, including Chair Paul Atkins. In fact, Chainlink's co-founder Sergey Nazarov told us he met with Atkins on Friday. So I'm wondering what you think about the SEC fielding all these meetings with people involved in the crypto industry, including yourself, and what are you hoping comes out of these meetings?
Yeah, it's been really great. I mean, the SEC Crypto Task Force, who I met with yesterday, they have really been leaning into this open door narrative. And, they've had meetings with industry participants, as you've noted, since I want to say early this year, maybe February or March. And, they're meeting with anyone who wants to speak with them, ranging from, all across all sectors of industry. And it's really been a change from, the SEC from last year. And, I think it's great. They've really pivoted to this open door policy. And it's not just, they really do mean it substantively. And, these meetings are great because they're not doing them just to check the box, but they're asking thoughtful questions and they're really thinking through issues. And I think, their goal and what I hope comes out of it as well is that, the feedback that they get from the industry, right, where they're learning about the technology, they're hearing about the pain points that builders are having with the current state of regulations, and they're going to use that, I hope, to craft regulations that really, speak to the realities of the technology.
Now, we spoke about this in great detail during a panel at the Wyoming Blockchain Symposium last month, but what do you think about the Clarity Act that the House passed over the summer, and what would you like to see for crypto market structure? What are some of your priorities as an industry insider?
Yeah, I think the Clarity Act was a great first start, and it was such an amazing bipartisan win coming out of the House. So I think that it was a really strong signal that Congress can move quickly in this space. And that draft was very comprehensive, and I think that what we saw lately out of the Senate, we saw their last draft this past weekend. And, I think what's important is that it really reflects industry feedback. And, the Senate, their initial draft solicited a lot of feedback on, a range of topics. And industry was really quick to provide that feedback and to provide thoughtful and comprehensive feedback. And I think, the latest draft we saw out of the Senate really does reflect the incorporation of some of that feedback. The draft is much more robust than the initial draft. And I think it really drills down and tries to elaborate on areas of, uncertainty and where they've received feedback as to that effect. And also tries to flesh out provisions that originally were left to the rulemaking process, which, does not assist us in providing the clarity that the industry is looking for. So I think that, the more that the draft can, harmonize itself with clarity and incorporate industry feedback, the better.
Yeah, and speaking with me during the Wyoming Blockchain Symposium, Senator Cynthia Lummis, who chairs the Senate Banking Subcommittee on Digital Assets, said that the Senate plans to use the Clarity Act as a baseline for its version of a market structure bill. She also told me that she's hoping to have a market structure bill on the president's desk by Christmas. Senator Lummis also told CNBC that the draft has yet to get support from Senate Democrats, but that bipartisan discussions are in fact underway. What do you think about that timeline? Are you optimistic we'll see a crypto market structure bill become law here in the US by the end of the year?
That's the $1 million question. And, I think everyone is hopeful, and we are seeing a lot of momentum. And, this latest Senate draft did, pick up provisions that it was clear that were intended to harmonize efforts that were included in the Clarity Act. And those efforts to harmonize will really go a long way in helping the bill move through the legislative process. And as it relates to bipartisan support, we saw yesterday morning that a group of Senate Democrats, they came out with a set of market structure principles that they have been thinking about. And I think it's really a strong signal to show that there's bipartisan willingness to participate in this process and in the negotiations. And that really shows that there is a potential path forward to move forward in a bipartisan way. So there's a lot to happen between now and then, right? We have multiple committees within both chambers of Congress, markups and reconciliations and the usual politics. So I think that it could be that this process extends into the winter or possibly further.
Absolutely. Now, taking a look back, in July, the House also passed the Genius Act stablecoin bill, and then it was sent to the president's desk, marking a major milestone for the crypto industry as the U.S. signed its first major crypto legislation into law. Since then, we have seen a lot of interest in stablecoins. During an earnings call, for example, JP Morgan CEO Jamie Dimon, a known crypto skeptic, said that while he doesn't get the appeal of stablecoins, he can't afford to sit on the sidelines. Bank of America and Citigroup also expressed interest, as did Walmart and Amazon. So what do you think has changed since the Genius Act became law?
Yeah, this is what I love about the Genius Act and the passage of the Genius Act is it really showed that not only can regulation keep up with the pace of innovation, but it really can stimulate innovation. As you noted, once this bill was passed and signed into law, we saw just a flood of partnership announcements and new project announcements in the stablecoin space. And I just think that the acknowledgement that stable, compliant digital dollars can really power real world applications is what the Genius Act passage provided. And it really signaled, it almost served as like a green light for those that were on the fence about whether or not they should participate in this space. And at the same time, it really has lit a fire under those who weren't thinking about participating in the space or weren't sure if they wanted to. And now they're seeing that their competitors are entering the space and they don't want to miss out.
What else would you like to see from lawmakers here in the US as it relates to crypto? I spoke with Coinbase's chief legal officer, and he told me crypto tax policy is something he would like to see addressed on Capitol Hill. Is that a priority for you as well? Or is there something else you are more focused on?
Absolutely. I would echo that. I mean, tax policy is the next, big area that requires discussion and fleshing out. There are some promising proposals that are at their inception that have been discussed that, scratch the surface in a meaningful way and, deal with topics like minimum de minimis thresholds for transacting and the treatment of staking rewards and how and when those will be taxed. But there are many other issues, that come up as folks endeavor to transact with digital assets. One that is top of mind for I know a bunch of layer ones is certainly this concept that was introduced in the White House report that speaks to how to incentivize from a tax perspective the onshoring of foundations that are outside of the US presently. So I'm excited about that. And I'm also excited to see where the discourse goes as it relates to DeFi. To the extent that DeFi is not comprehensively covered in market structure, I think that will be an interesting place to keep an eye out for what comes next.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.